Primarily, we had an existing finance structure in place, and we wanted to put a structure that was more flexible, that was larger, that was unsecured, and ultimately supported the business as we saw it going forward from a growth perspective. In terms of the objectives, they were very much met. We were massively oversubscribed. We leveraged our business model and relationships with the banks. We were able to get a multiple facility which had dimensions in a multiple level. We had a revolving credit facility, and we also had a long-term term loan which matched our business exactly as we wanted the business to be structured. Yeah, back in November 2013, we raised the facility. And during that time, we shared a lot of information about our company with the banks. So I think it sowed the seed of a longer-term relationship with the banks to enable us to kind of expand and have a broader kind of facility with the banks. So the key from the first one was the relationship with the banks. The banks then began to understand our model, how we operated in a more deeper level. And also the facility, because it was unsecured, it was really backed by the business model. So it all came down to that relationship that we have with the banks. From OSN's perspective, the business that we're in is now very long term. So we need to go to studios and make deals for long term, which is great for our customers because we lock in content for a longer period of time. We also have shorter needs, which would be investments in set-top boxes. So the way this deal was structured, it matched the way our business was. So we had a revolving credit facility, which we could tap into whenever we wanted to and only had to repay at the very, very, very end. And it gave us maximum flexibility around the working capital perspective. And in the longer term investment, which is the deals that we're doing with the studios, required longer term financing, which was available with this. Also, we needed to invest in broadcasting equipment, which again is a long-term facility. So this, from our perspective, was definitely groundbreaking because it mixed both the short-term and long-term needs within one facility. Clearly, the biggest challenge there is when you have something which is real estate, there's an asset, there's many comparables. The deal that we did is clearly backed upon the strategy, the business model, how long we're actually in the business, how long we will be in the business going forward. So the bank needs certainly comfort from our strategy, our management team, and also the length that we've already been in the business. I think OSN basically was founded, the founding companies go back 20 years. So we leveraged off the back that we were long-term in the actual business. And we needed to convince, obviously, the banks that we're very important in the market. The market is going to grow very, very strong. And we had to get across to them the key fundamentals of us, the market, the customers, and what the future was.
Just a little bit of background there. When we closed the initial transaction in 2013, which was fully underwritten, a $200 million transaction, that was really the first time a TMT company came to the market here in this region. And I think it was a great success story then. Because the deal was very well structured. It was oversubscribed at the time. When the company came back in 2015 to basically refinance the transaction, the response was overwhelming. Actually, the initial transaction was $200 million, and we could raise almost $800 million, actually 4 times the initial deal. Actually, the response from the market, we were a group of 6 banks. And we were able to expand that group to 11 banks, mainly Tier 1 international banks from the region as well, but also banks from Europe, from North America. So a very well attended transaction then. I think the key success of this deal is obviously, I mean, the company is amazing in terms of performance. Since the merger between Showtime and Orbit in 2009, it's been a success. Initially, it was a bit tough. Obviously, it's a very competitive market, and there were quite challenges on the piracy. But the company invested heavily in a technology platform, increased the subscriber base, invested in content, Over the years, we could see really the turnaround. And so in 2013, the first transaction which was closed, obviously saw banks coming into this deal. In 2015, the deal was book run by Mashreq alongside our fellow colleagues from BNP and Barclays, and it was a great success. The deal was increased. Actually we have reset the tenor. It was a 5-year tenor, and we have reset that tenor. The RCF component of the transaction was also increased. It was 15% of the initial deal. It became 35% at a lower price, unsecured. And I think the key feature of this transaction, in addition to allowing a flexible covenant package, it allowed for shareholder distribution. Initially the shareholders, KIPCO and Mawarid, supported OSN a lot during the initial days, and this was a very important transaction for OSN because it was a time for them to tell the shareholders that they were okay to stand on their own feet, and they were stable. They had a very stable business model, growing. So basically allowing them to make distribution to the shareholders. So clearly for the syndicated loan market, a great transaction because a TMT company, it's a very specialized business, and eventually I think there'll be many more to come, hopefully, and a very positive deal indeed.